to Mark Gibson Shumaris channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
Okay, good. So business combination. So business combination, by definition, this is a transaction or other event in which an acquirer obtains control of one or more businesses. No? So tandaan class, business combination takes place between two or more entities, no? Where the acquiring entity is called the acquirer and the entity being acquired is the acquiree. Ito medyo nakakalito ha. Kahit ako during the undergrad, litong-lito ako dun sa acquirer and acquiree. Kaya ang tatandaan na lang natin, acquirer, siya yung kumukuha, kaya nga acquirer, no? And then acquiree, siya yung kinukuha. No? So, ganun lang para at least mas mabilis maintindihan. And then, in terms of methods, no, of acquiring an entity, we have direct acquisition and indirect acquisition. Direct acquisition is simply investor acquiring the asset and liabilities of one or more businesses. The focus of the first part of our discussion for today will be direct acquisition. This is also known as merger. Now, the other method of business combination is the so-called indirect acquisition. Ano naman to? Investor acquires shares in another entity and obtains control. Tandaan class, there has to be control, no, being obtained, no, in order for us to effect, no, business combination. Kasi kung if there's no control, then IFRS 3 will not be applicable. Okay. So brief overview first, no, before we proceed with different discussion problems that I have prepared for this afternoon. So in business combination, we'll be dealing with the acquisition date. Of course, no. During the acquisition date, we'll touch on these topics, no. So goodwill or gain. So goodwill, basically, if the consideration, no, so the amount of fund that we pay is greater than the amount of the fair value of the net assets of the acquiring entity. O yan ha, medyo nag-imagine ka ngayon, pero okay lang yan, but later on, we'll apply it to a problem. And then followed by the acquisition-related expenses. Acquisition-related expenses, these are the expenses, well, basically related to the activity of acquiring the entity. How are we going to treat it? No? So, yun lang yung pag-usapan natin dyan. And then, of course, balances after the merger. Other factors post-acquisitions has to do with measurement period and contingent consideration. Later on, we'll also cover these items. So the accounting for business combinations, sabi natin, it follows 4 steps. Number 1, we have to identify who is the acquirer. We have to determine the acquisition date and recognize and measure the identifiable assets acquired, liabilities assumed, and any non-controlling interest in the acquiree. Then later on, step number 4 is we'll recognize and measure goodwill or gain. Ito namang gain, this is the opposite, no? So meaning, the fair value of the net assets of the acquiring entity is greater than the amount of consideration being paid by the acquirer. Pero this is very rare, no? Rare instance that this will happen. That's why IFRS 3 mentions to double check first, no? Is if there's really a gain to be recognized, no? Okay, of course, no? So para mas mapabilis yung buhay natin, I have introduced templates, no? So I used to call this summary notes as my cheat sheet, no? So ito yung pinaka-guide mo on how to go about problems on business combination. So later on, we'll use this, we'll apply this to different discussion problems. But as you can see, Di ba sabi natin, we have to determine how much goodwill or gain, no? Effectively in the business combination. So how are we going to do that? We'll have to compare or deduct, no? So identify first magkano ba yung consideration transferred. So consideration, it can be a combination of cash. Of course, we measure it at face value. Non-cash asset. No? So what if the acquirer extend aside from cash and nagbigay pa ng ibang assets, no? So it could be PPE or inventory or AR. Of course, could be the form of liability. Now, contingent consideration, we have to distinguish whether it's a liability or equity. Paano yon? So if it's payable in cash, it's a contingent liability. If it's payable in shares naman, it's a contingent equity. Now we have to compare it to the fair value of the net assets of the acquiree. So tandaan class dito, it's the fair value. No? So we have to adjust the book value of the net assets of the acquiree to reflect its fair value. Kasi yun yung basis natin sa business combination. So to get that, of course, we simply get the fair value of the assets less the fair value of the liabilities. Now, yun nga yung pinag-uusapan natin. If the result is positive, it's goodwill. If it's negative, it's gain from business acquisition. Okay? So, template pa lang yan. Pag-uusapan natin yan lahat later on. Now, how are we going to treat those acquisition-related costs? As a general rule, we have to expense it outright. So meaning we have to charge it to our P&L. Now, there are exceptions. No? So general rule, expense outright. Exceptions are these two. So if it relates to bond issue costs, so it has to be a deduction, no, from the bonds payable account. Number two, if it's share issue costs, so deduction from share premium from issuance related to the combination. In case there's excess, so we establish stock issue costs, no, account, which is a contra equity account and a deduction to your to your retained earnings. No? So another cheat sheet, no, that we're going to introduce in business combination. Okay, so actually that's all the theoretical concept, no, in business combination. Now to illustrate all of that, let's have this problem. Now this is a pansin mo, no, parang very complex problem, which is true. It's complex. In fact, business combination is one of the stars in advanced financial accounting and reporting. That's why what we're going to do here is we'll approach it step by step, no? So para at least mas madaling absorb, no? So let's have problem 1 and with all these requirements, no? So number 1, how much is the goodwill or gain arising from acquisition? Number 2, total assets of the merged corporation. Number 3, total liabilities. Number 4, share premium. And then number 5, retained earnings. So basically, pinapakompute sa atin yung buong balance sheet. No? So let's have problem 1. I'm not sure kung nakikita na ba yung Excel ko.
Yes po, sir.
Okay, sige. Oh, sige, good. Thank you. Sige, pag-usapan natin ngayon yung requirement number 1. Tinatanong lang dyan, goodwill. No? So, of course, yung cheat sheet natin, kinopya ko lang yun, no? Papunta rito. Di ba, ang nakalagay doon una, basahin ko muna yung problem. On December 31, 2021, Kang Corporation acquired all the assets and assumed all the liabilities of Ravon ng company by paying 400,000 pesos, issuing bonds with face amount of 300,000 at 125 and issuing 20,000 of its own shares with a fair value of 57.5 per share. Because of the very high profitability of Ravona, Kang further agreed to pay additional 200,000 on December 31, 2022 if the merged corporation's earnings exceed the 2022 forecast by 30%. As of acquisition date, it is estimated that there is 60% chance that the condition will be met. O dito muna tayo sa first paragraph. Pansinin niyo, class, Kang is the acquirer and Ravona is the acquiree. Kang is acquiring all the assets and assume the liabilities of Ravona. Ano yung mga consideration that is willing to pay? Cash. O sige, lagay ko na yung cash. Cash, ang measurement naman is at face value. So wala tayong problema. Cash is at 400,000. Sabi natin kanina, sige, para at least mas klarado tayo, I'll also put here the cheat sheet. May natin pag-usapan yung iba sa ilalim. Ito muna tayo. Step number 1 natin. Actually, step number 1, identify the acquirer, di ba? So, na-identify natin yun. It's Kang. Step number 2, ano nga yung next step natin? Identify the date of acquisition. So, the date of acquisition is December 31, 2021. And then, next is, yun na, identifiable assets and liabilities and compute for the goodwill. So, actually, we are in step number 3. Alright? So, sabi dyan, non-cash assets, wala naman. Bonds, we have to value it at face value. No? So, how much is the bond? Bond, it's 300,000 multiplied by 1.25. That's 125. No? So, that's for the bonds at fair value. Shares naman, how much was issued? Sabi dyan, 20,000 of its shares with fair value of 57.5. So, that's 20,000 multiplied by 57.5. And then finally, ito, there's contingent consideration. No? So sabi dyan, Kang agrees to pay additional 200,000 pesos. So una nating i-alamin, is it a contingent liability or equity? So sabi natin, if it's payable in cash, it's liability. So it's the contingent consideration here is payable in cash amounting to 200,000. How to measure that? Sabi natin, fair value or best estimate. So in this case, we don't have the fair value, but we have the best estimate amounting to 60% probability. So with that, 200,000 multiplied by 60%. Now we have calculated the consideration transferred amounting to 2,045,000. So I hope nakakasunod. Wala pa tayong masyadong analysis na ginagawa. We're just following the cheat sheet. No? Itong summary notes natin. Sige, puntahan natin yung susunod. Sabi dyan, basahin ko muna ulit pala yung mga other items. No? In addition, Kang paid the following acquisition-related costs. No? So, pang ganyan, meron na agad sinasabi. Finder's fee, legal accounting, SEC, registration, general administrative costs. O ito, dito magkakaroon ng kailangan natin analyze a bit kasi meron ng cost of printing stock certificates, accountant's fee related to the stock issue, SEC registration of new shares issued, and bond issue cost. So tandaan, as a general rule, all the acquisition-related costs are expensed outright except if it's related to bond issue cost and stock issue cost. No? So this cost of printing stocks, accountant's fee, and SEC registration, these three are related to the stock issue cost. No? So later on, we'll deal more of that. No? Now, given are the statement of financial position ni Kang and Ravona. Also provided are the fair values. No? So, ang kailangan lang natin dito is tandaan, fair value of the net assets of the acquiree. So while the acquirer's fair value is also provided, hindi ko kailangan yan. Kasi nga, Ravona is the acquiree. Okay? So, due to the specialized nature of the equipment owed by Ravona, it has no available fair value on December 31, 2021. In order to push through with the merger, it was provisionally valued at 360. It has a remaining useful life of 5 years from date of merger. O sige, sinasabi lang dito, wala daw fair value yung equipment. No? Equipment has book value of 361,500, pero kung napansin mo, walang fair value. Yet they agreed to put how much? 360,000 as the provisional value. No? So with that, ready na tayong gawin yung second portion of this cheat sheet, no, in order for us to get the goodwill or gain. So isa-isa natin to, ano yung assets. No? Of course, we have cash of 45,000, AR of 54,000, 78,000 inventories, 5,000 prepaid expenses, 1,550,000, building 768,000, building, so 1.55 is for land, and then we have 360,000 for the provisional value for the equipment. No? So yun lang lahat yun, inisa-isa natin siya. No? That's the fair value of the assets. Now, going to your liabilities naman, we have 200,000 notes payable. Tandaan ka sa fair value ang kinukuha natin. Then, notes payable of 765,000. Okay? Of course, right now, we have the total fair value of the net assets amounting to 1,895,000. Now, if we compare it to the total consideration, pwede natin ma-compute how much will be the result. No? So the result will be positive. So, meaning we have to recognize goodwill. So, the answer to number 1, it's 150,000 pesos. Okay? So, at least kuha na agad natin yung number 1. No? Amounting to 150,000. Alisin ko to kasi natapos na tayo dito. Para siguro mas ma-appreciate, no? Let's also talk about the journal entries. Tandaan, class, in merger, we are getting all of the net assets of Ravona. So meaning, ina-acquire natin lahat ng assets. At the same time, we are assuming all of its liabilities. So binibili natin sa Ravona 100%. No? So that's so therefore, the journal entries to effect that would be, of course, to transfer all of the assets and liabilities of Ravona to the books of Kang. No? So pansinin mo ha, inuna ko si AR. AR is 54,000. Yun pa rin yan ha. Then 78,000 na inventories. 5,000 na prepaid expenses. Kaya siya debit kasi nga ito sa libro ni Kang, 'di ba, kinukuha natin, binayaran. Hindi natin pinag-uusapan ano yung entry sa books ni Ravona kasi nga we are the acquirer, we are purchasing all of its assets and liabilities. So that's why we have to record it in our books, no? So nire-record natin sa books natin 'to. So 5,000 for prepaid expenses. Land 1,550,000, building 768,000, goodwill of equipment of 360,000. This is the provisional value. Baka kasi malito ka, sabihin mo wala namang fair value. Correct, walang fair value. But the last paragraph talks about putting a provisional value of 360,000. And of course, debit goodwill. Goodwill here is what we have computed earlier, amounting to 250,000. Remember, this goodwill will form part of the asset of Kang. So 150,000. Now, we also assume the liabilities. So we have AP of 200,000 and then notes payable of 765,000. Pansinin natin yung cash. Kaya hindi ko siya nilagay doon kasi mangyari, may debit cash ka, at the same time may credit cash ka. So, kunuha lang natin yung net. So, yung net would be 45,000. Yun yung nakuha from Ravona. But at the same time, syempre may binayad tayo. Magkano ba yung binayad natin? 400,000. Remember, no? This is the consideration transferred to Ravona. Part of the consideration transferred to Ravona. No? 400,000. 400,000 yung binayad natin. At the same time, meron tayong na-receive na 45,000. So, net niyan is 355,000. Next, of course, no, part of the consideration is also bonds. No? So sabi natin, bonds payable, this should be valued at face value. Magkano ba yung face value? 300,000. Of course, the excess will form part of premium on bonds payable. No? 75,000. Paano natin nakuha yung 75,000? Pansinin mo, class, yung consideration transferred was valued at its fair value, no? So 375,000. So we have recorded it lang naman, 370. You just need to split it kasi nga bonds payable should always be at face value. Finally, yung shares, color-coded na lang natin para at least pag binalikan mo mas madali. So we have 1,150,000. Of course, we have to record that. Share capital at always at par. Magkano ba yung par? 50 pesos. 50 multiplied by 20,000 shares. That's 1 million pesos. And anything in excess is booked under the share premium from issuance. And then finally, yung contingent liability natin ay 120,000. So yun. Okay? So these are the entries. Now, paano naman yung mga acquisition costs? So sabi natin, class, acquisition costs generally are expensed outright. Now, meron lang tayong mga exception. Siguro, the best way to go about this is to talk about first yung mga exception, no? So, balikan natin yung cheat sheet natin. Lalagay ko lang side by side. Ayun na. Yun. Okay. So, sabi dyan, bond issue cost should be a deduction from the bonds payable account, no? So, therefore, of course, no, dahil nagbayad tayo, dito tayo sa bond issue cost muna. Dahil nagbayad tayo, magkano ba yung binayad natin na bond issue cost? That's 10,000. Dahil nagbayad tayo, automatic credit is cash. No? And then the debit, instead of expense, so we book it onto premium on bonds payable. No? So effectively, it's a deduction to your bonds payable. Okay? Kasi di ba nag-recognize tayo kanina ng credit of 75,000 in excess dun sa face value. So for the bond issue cost, the rule is to deduct it from the total bonds payable account. No? So it's a debit to premium on bonds payable. Puhin ko to para at least hindi nakakalito. And then credit cash. So okay na tayo dito sa bond issue cost. Punta natin yung stock issuance cost. So sabi natin, stock issuance cost should be booked as deduction, no, from the share premium from issuance related to the combination. So magkano muna yung total stock issue cost natin? So we have 3. The cost, 10,000. Accountant's fee, 20,000 plus the SEC registration, 40,000. So for a total of 70,000. Of course, credit to cash, 70,000. Ito ngayon yung itetest natin. Is 70,000 covered by the existing share premium? The answer is yes. No? 150,000 and 70,000 lang yun. So debit share premium. And what if gas? Hindi. So what if, so for example, no, ito lang magbigay lang ako ng example, no? So what if ang naging stock issue cost natin is 160,000. So exhaust muna natin yung first 150,000 from here, from share premium from issuance, and then the 10,000 will have to be booked to stock issue cost. That stock issue cost is a contra equity account or a deduction from your retained earnings. Okay. So yun lang, no? Para at least meron ka lang idea how are you going to approach if there is excess, no? If your share premium from issuance is not sufficient to cover your stock issue cost. Okay? So I hope nakakasunod pa. And then, of course, the others will have to be expensed, no? Will have to be expensed outright, no? So instead of putting all the expenses, lagay ko lang dyan retained earnings. Pero tandaan, retained earnings to ni acquirer, which is Kang Corporation. Okay, so ano ngayon to? We have 50,000, 50,000 for legal, SEC registration of 15, plus 35,000 general and admin cost. Okay, so okay na tayo dun sa mga journal entries for the acquisition cost. Puntahan ngayon natin yung question number 2. Sa question number 2, ang pinapakompute sa atin is total assets of the merged corporation. Actually, class, there is also a template, no, here. Pero nalagay ko na siya dyan para side by side sa computation natin. Okay. So we have total assets, no? Total assets, sabi dyan, book value of the assets of the acquirer. So, pinag-uusapan dito, si Kang. Kinukuha daw natin yung book value of Kang's assets. So, paano yun? Kinuha lang natin siya doon sa table, no? So, that's 5 million. Next, fair value of the assets of the acquiree. So, na-compute natin siya kanina. Lahat lang nung assets niya plus the 45,000 na 45,000 cash, no? So, wala pa tayo masyadong na-analyze, no? Kinuha lang natin lahat ng fair value of the assets. Simply. This also includes the provisional value of 360, no? Kaya kung napansin mo, 2,500,000 plus 360, yun din naman yun. Okay? Less, pansinin, cash consideration paid to acquiree. Eh, alam naman agad yun, that's 400,000. Okay? Less acquisition-related costs paid in cash. Basically, all of those three. No? So, we have 150, 70, and 10. Or that's equivalent to 230,000. And then, of course, we have to add goodwill from acquisition, 150,000. So, the total assets would be 7,380,000. Now, here's my suggestion to you. Kasi nga, ito mga cheat sheet natin, this won't be of use, of course, if you don't apply it to different problems, no? So I can only produce 1 or 2 problems during live session, but by all means, I highly encourage all of you to try it, no, on your own, no? So I'm sure at this stage you have your review materials, different review materials na, no? So please try this, and I hope this will help you, no, in managing uh, problems in business combination, no? O sige, so that's requirement number 2. Punta natin yung requirement number 3. So in requirement number 3, again, I have prepared this cheat sheet for you. Lagay ko lang dito, pero palitan ko to, no? Gawin ko na lang siyang total liabilities. Okay, pag-usapan natin yung total liabilities. So here's the cheat sheet. Sabi natin, book value of the liabilities of the acquirer. Tandaan na, it's the book value. Kasi nga, we are not restating Kang's books. Why? Kasi di ba under going concern, book value is equivalent to the fair value. That's why the book value of Kang should reflect its fair value, and it's the acquiring entity. You know, the reason why we are adjusting Ravona's books to its fair value kasi nga kinukuha natin siya. And remember, binibili natin si Ravona. Eh, ano nga yung price used to buy? Di ba sabi natin, fair value by definition, this is the price where there is a willing buyer to buy and a willing seller to sell. So that's the very reason why we are restating or adjusting Ravona's assets and liabilities to its fair value. So yun lang naman yan, no? Okay, next, we have the fair value of liabilities of the acquiree. Na-compute natin yan kanina, but simply that's 965,000. Liabilities issued by the acquirer, no? So how much is that? That's 365,000. Paano natin na-compute ng 365,000? We have fair value of funds, 375,000. Paano natin na-compute yan? That's 300,000 multiplied by 125. And of course, meron tayong reduction, no, in the form of bond issue costs amounting to 10,000. Given din naman yan, that's 10,000 over here. No? So that's 365,000. And then of course, we have the contingent liability amounting to 120,000. So total liabilities would be 2,700,000. Okay? So that's requirement number 3. Punta natin yung number 4. So in number 4, ang pinapakompute sa atin is share premium, total share premium of the merged corporation. So again, here's the cheat sheet. Sabi natin, share premium of acquirer. So share premium ni Kang, meron ba? Ayun, 1 million. Share premium from issuance, that's 80,000. Paano natin na-compute yun? O, class, meron tayong share premium from the issuance cost, 150,000. Paano nga ulit na-compute yun? Para hindi na ako mag-scroll up. We have 20,000 multiplied by the par value of 50. So anything in excess, yun yung nabubuk sa share premium. So that's 7.5, no? But then, we have to reduce it for the share issue cost, no? 70,000, ayan yung tatlo, 10, 20, and 40. So we still have remaining 80,000 share premium from issuance. So the answer is 1,080,000 pesos. But what if there's share premium for the share consideration. So ano ibig sabihin nito? If there is contingent equity. So we still have to include that here. No? Okay. So number 4, share premium of the merged corporation is 1,080,000 pesos. Ito hindi tinatanong pero pag-usapan na rin. Pag-usapan na rin natin. What if the problem asks you to compute for the total share capital? Of course, ang kailangan lang natin is share capital of the acquirer, that's 2 million, plus share capital from issuance. So that's 1 million. So total share capital of the merged corporation would be 3 million pesos. And then finally, number 5, ang pinapakompute sa atin is retained earnings of the merged corporation. So, cheat sheet ulit, retained earnings of the acquirer, that's 750,000, less acquisition-related expenses of 150,000. Yung 150,000 na yun, ito yung mga expenses that we have expensed outright. So, ito yung 50, 15, and 35. Okay, so that's 150,000. Total retained earnings is 600,000. Siguro balikan ko dito, class, ha? Bakit kaya hindi na isinama yung share capital, share premium ni acquiree? Tandaan, class, binili na natin yung net assets ni Ravona. So therefore, there will be no share capital, share premium, or retained earnings left for Ravona. Okay? Okay, so that's problem number 5. Now, balikan ko yung PowerPoint natin. And let's talk about measurement period adjustments. No? So, kanina, meron tayong, di ba, provisional values and contingent liability or contingent equity. How are we going to account for that? So sabi natin, there is so-called measurement period adjustments. Measurement period ends when best information is obtained, or 1 year, whichever is earlier. So if it falls within the measurement period, the adjustment will have to be taken up retroactively, and it will have impact to your goodwill or gain. Now, if it's not, so meaning kung final values or estimate falls beyond the measurement period, then the application will be prospective na lang. So meaning, it will be charged to your profit and loss, and it will no longer have any effect on the goodwill or gain. Okay? So that's on the provisional values. No? So remember, kanina meron tayong ganyan sa equipment, no? Kaya pag-usapan natin yan. Of course, there's also contingent consideration. No? So it's the same rule. No? Right now, meron tayo dito liability. Sabi dyan, we have to remeasure it at fair value. So, ganun pa rin, if it's within the measurement period, retroactive application. If it's beyond, prospective application. Compliance with condition. No? So, sabi, if it's a compliance with condition, hindi na pala ito applicable because it has to be prospective and it will impact P&L. If it's equity naman, so sabi dyan, no remeasurement until settlement. So again, these rules will not apply. Para ma-illustrate natin yan, class, let's have discussion problem 2. Actually, it's the same problem. Itutuloy lang natin yung requirements 6. excited ka na naman, nakita mo yung things. Requirement 6 and 7. Basahin ko yung requirement number 6. On July 1, 2022, it was determined that the probability that the condition attached to the additional cash consideration is 75% as of acquisition date. On December 31, 2022, it was shown that the condition has been complied with. The journal entry to record the adjustment and payment of additional cash of 200,000 pesos to Ravona on December 31, 2022 will include. Ayan. So, puntahan natin ngayon yung problem. Sige. Focus muna tayo kay number 6. Alisin ko itong si 7 para hindi nakaka-distract. Okay. So, as of July 1, 20, tandaan na, kailan yung acquisition date? December 31, 2021. Pagdating ng July 1, 2022, sabi, they have determined that the probability dapat daw 75%, not 60%. So question, is it within the measurement period? Well, the answer is yes. Kasi nga, it's still within 1 year. No? Diba sabi natin, it's when the information becomes available or 1 year, whichever is earlier. So in that case, dahil pasok siya sa measurement period, lagay ko to para at least na may nakikita tayo, ha? Yan. Dahil pasok siya sa measurement period, so we have to apply this rule. So retroactive application and it will impact goodwill or gain. No? So ang nirecord natin kanina, 120,000. Paano nga yun? So that's 200,000 multiplied by 60%. Ngayon sinasabi, 75% daw dapat. No? So should be is 150,000. Ang recorded is 120,000. So we have to increase it by 30,000 pesos. So debit goodwill, credit contingent liability. Kaya nga sinasabi natin retroactive application kasi it will impact the recorded goodwill. Okay? Ngayon, pagdating ng December 31, 2022, it was shown that the condition has been complied with. The journal entry to record. No? So pagdating ng December 31, 2022, na-meet daw ni Kang yung condition. So, ibig sabihin, they have exceeded the 2022 forecast by 30%. So, ibig sabihin, na-achieve nila yan. So, unang tanong, is it within the measurement period? Well, the answer is yes. However, dahil meron siyang condition attached, sabi natin dyan, compliance with condition, prospective na lang yung approach. Yun na, medyo tricky, class, ha? In that case, we have to record it as against to your P&L. No? It's no longer against goodwill, even though it falls within the measurement period. No? So, paano yun? We have recorded 150,000, pero di ba, ang kailangan natin bayaran is 200,000. So, we have to adjust. No? So, debit loss of 50,000 and credit contingent liability of 50,000. Saan galing yung 50,000? Tandaan, ang ibabayad talaga natin is 200,000. Ang nirecord lang natin initially is 120,000 dahil nagkaroon ng increase in the probability, likelihood of that particular transaction from happening from 60% naging 75%. So we have to increase that. So 30,000. So magkano pa yung kulang? 50,000. So we have to adjust our contingent liability. Pero this time, we are no longer using goodwill. Kasi nga, there's condition attached, so we use P&L. So, debit loss, credit contingent liability. Ituloy na natin, syempre, dahil nga they have complied or achieved the condition. So, bayaran natin siya in full. Debit contingent liability, credit cash for 200,000. So, here are the entries involved. Check na natin, ano dyan yung tama. Debit to loss, 80,000, hindi. Debit to loss of 50,000, ayun. That's the answer. Kasi credit to liability of 30,000, hindi rin. The credit was 80,000. Memorandum entry only, lalong hindi. Kasi nga, we're posting some journal entries here. So the answer is letter B. Okay, so that's how we should treat contingent consideration if there is a condition attached to it. So that's requirement number 6. Now, moving on to requirement 7. In requirement 7, lagay ko lang ito ulit dito. Ay, hindi ito. Hindi ko lang yung this one. Okay. So in requirement 7, tinatanong naman, on December 31, 2022, the value of the equipment was finally fixed. So remember, balikan natin yung kanina. Yung equipment, wala daw fair value, but they have provisionally valued it at 360,000. Come December 31, 2022, na-fix na nila yun to 400,000 pesos. Ang tanong, is it within the measurement period? The answer is yes, kasi it's within 1 year. So, dahil nga within the measurement period, na-record natin siya kanina at 360,000, ang dapat pala is 400,000. So, this is should be, this is the as recorded. So, therefore, we have to increase it by 40,000. Since it's still within the measurement period, the entries would have an impact to your goodwill. So it's debit equipment, dahil nga ini-increase natin, and credit goodwill. Now, of course, itong 360,000 na na-record natin initially, nag-depreciate na yan. So, ang depreciation natin is 5 years. Since the value should be 400,000, kailangan natin magkaroon ng catch-up also in the depreciation. So, debit depreciation expense, 8,000. Credit accumulated depreciation of 8,000. Actually, ito rin naman yung calculation. Nagay ko lang doon side by side. So, here are the entries. Now, balikan natin yung requirement number 7. Requirement number 7, this is very tricky, kahit ako ay myself, I hate this type of problems. Kasi imagine, ang daming pinapagawa, tapos ang choices ko yung mga entries pa. So, you have to be familiar with the different entries. Otherwise, hindi mo masasagot yung mga ganitong problem. So, sabi dyan, debit to goodwill? Hindi, kasi it's credit. Debit to accumulated depreciation of 40,000? Again, hindi, kasi 8,000 lang dapat. Debit to depreciation, debit to depreciation, 8,000. Credit to gain, hindi rin, kasi ang credit natin is goodwill. Okay, so the answer is letter C. Okay, so that's requirement number 7. Actually, that ends our discussion on business combination merger.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!